Good morning, traders. Good morning, traders. Today we want to talk about how to avoid the trap of Elliott wave analysis. How to avoid the trap of Elliott wave analysis. This video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. All right. Are you an Elliott wave practitioner? Are you an Elliott wave expert? Are you an Elliott wave guru? Are you an Elliott wave trader? Are you an Elliott wave student? There is an Elliott wave analysis trap that I want to talk about today, and I want you to remember that once and for all. All right. So that Elliott wave trap usually takes place when we are counting Elliott wave, when we are performing an Elliott wave analysis, and it can become a little bit confusing, okay, to a lot of Elliott wave traders. All right, they will be wondering what's going on. All right. So very often you will see something, because I don't want this video to be too long. You may be on a particular time frame, and then you see 1, 2, 3, 4, 5 waves. All right, and without any Elliott wave, principal violation, it's a clear-cut multi-wave. And then after that, you see a correction where the price will come down, and the correction will be completed. Okay. And then you will say that, okay, an Elliott wave cycle is now completed, because the Elliott wave cycle is formed of the multi-wave plus the corrective phase. So from here up down to this point, we have an Elliott wave cycle. And then you will notice again that a new cycle has started. You need to remember this so you don't fall into that trap in the future, especially if you are, a professional Elliott wave trader. A lot of professional Elliott wave traders sometimes can get into this little trap that you need to know. And the price will go up again, forming 1, 2, 3, 4, 5, wave, completing again another trending phase or multi-wave right here. And then the correction will begin, and the price will come down first time to this point, okay? And as the price reaches this point, people will say that, okay, in the past we have a multi-wave and a correcting phase, and then we have a new trend, okay? And then now this is the end of another Elliott wave cycle, all right? So they're expecting a new Elliott wave cycle to end here, but it is not. So they will be expecting again the price to do what? They were expecting the price to go up again one more time, forming another trending phase, and pull back, and before going up one more time. All right. So looking at the bigger cycle, the higher degree wave count, so they will say this 1, 2, 3, 4, 5 wave is first wave, second wave, a third wave, a fourth wave, and now the fifth wave. All right. So here, hold on, in fact, so then they will expect, another move from here that will end here, and they will expect a bigger correction all the way down here. All right, so the first Elliott wave cycle is a mini cycle of a bigger cycle. So 1, 2, 3, 4, 5, correction. 1, 2, 3, 4, 5, correction. So that this is a 2 mini cycle. Yes or no? All right. Now, as we are thinking that at the end of the second cycle, a new trend will begin. 1, 2, 3, 4, 5. This is a trap, all right? By the way, you need to know it, all right? People will be expecting the price to do again 1, 2, 3, 4, 5. Okay, as it did before. All right. Do you like my drawing? All right. So here they will expect again. So if I want to do it properly before traders say, Joe, this is a violation of Elliott wave principle, blah, 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 blah. So let's do it like this, okay? So as they're expecting the price to go up again one more time, to trend one more time, 1, 2, 3, 4, 5, it will not. He will not. So they will see the first move up. They will say first wave, expecting the second wave, the third wave, the fourth wave, and the fifth wave. But instead, right here, the price will change direction and go down. All right, there's something going on all the time like this, because what is happening, because traders understand the correlation between the wave count of a higher degree and a lower wave count on a lower degree. They are talking about a bigger area wave cycle. You need to understand it's a bit of trap. So you see 1, 2, 3, 4, 5 correction. You see, okay, an area wave cycle has ended, and then again 1, 2, 3, 4, 5, another trending first, and a correction. Another area wave cycle has ended. So what is going to traders' mind is that there will be another trending phase, 1, 2, 3, 4, 5, before the bigger correction. The reason why they are thinking that there will be another 1, 2, 3, 4, 5 and a bigger correction is because they are thinking that this 1, 2, 3, 4, 5 is the first wave, and this is the second wave, this is the third wave, this is the fourth wave, and this will be, the fifth wave of the bigger cycle. And then they will expect the bigger correction of the bigger cycle, of the higher degree, cycle. So from here all the way up here, that's the trending phase of the higher degree wave count, all right? And then we will expect the higher degree correction. But sometimes that this portion here, if I color it now into pink, this portion here that I'm going to color now into pink will not happen. And it is a trap for many area wave traders, even some expert area wave analysts. So they will be saying that this stock has a high chance to go up again one more time, to reach this specific target, but it will not happen. And after that, there will be a correction all the way down here, correcting the bigger cycle. Are you getting the message now? So there is a bigger cycle. This is the trending phase of the bigger cycle, and this is the corrective phase of the bigger cycle. But before that, we have other mini cycle that were in place. But 1, 2, 3, 4, 5 correction, that's the first mini cycle. 1, 2, 3, 4, 5 wave plus correction, that's the second mini cycle, as we are expecting another trending phase before the bigger cycle, because we are counting a wave on the lower degree, but at the same time we are keeping our eyes on the higher degree. So as we see that, we say 1, 2, 3, 4 for the higher degree wave count. We are expecting the fifth wave of the higher degree, but sometimes the fifth wave of the higher degree will not take place. Why? That's a very good question. Sometimes, my friend, there is a pattern that I talk about at the stochasticmarket.com. That pattern is called the ABCD chart pattern. Alpha, Bravo, Charlie, Delta. So ABCD chart pattern, powerful chart pattern. So the price has formed, ABCD chart pattern. So this point here, that's what we call it, A, B, C, D. After the ABCD, as people are expecting the price to pull back here before another trending phase, the price will exhibit a correction. And that correction will correct, this move, 1, 2, 3, we correct the ABCD chart pattern by coming down 1, 2, 3. But as the price reaches this point, a lot of area wave traders are expecting another trend, because they are counting the wave also on a higher degree. So they are expecting the fifth wave of the higher degree to go up, forming another trending phase. But that will not happen, because a pattern ABCD is completed and a correction is underway. And if the price reaches this point, you need to be aware of the ABCD chart pattern. So it's a little bit of trap for area wave practitioner, for area wave expert, for area wave analysts, and it's happening all the time. And you will see it sometime on the quarterly chart, and mostly on the yearly chart, because we use the yearly chart to have a bit of idea about the higher degree wave count. So you are on the monthly chart, you are keeping your eyes on the yearly chart to see the bigger cycle as you are counting wave. But there is a little bit of trap that usually takes place when we have the ABCD chart pattern. So with the ABCD is formed of what? One cycle plus a trending phase. So one cycle, 1, 2, 3, 4, 5, correction. That's one cycle plus a trending phase. That will form the ABCD chart pattern. After that, traders will expect a move down and will be expecting the fifth wave of a higher degree, a cycle before the bigger cycle. But remember that sometimes The financial instrument, I'm not saying that anytime you see the ABCD chart pattern, the price will definitely come down like this. It doesn't mean that some stocks that are dynamically bullish will now exhibit the fifth wave of a higher degree, which means you may see 1, 2, 3, 4, 5 before the bigger correction, bringing the price in the zone of 50%, 61.8% Fibonacci retracement level, and sometimes even down to the 78% of the bigger cycle. But just be aware of it. Whenever you see the ABCD is formed, you have the two trending fares plus one correction forming the ABCD chart pattern. Be aware that if a correction has begun, that correction can be prolonged and correcting completely the ABCD chart pattern. That not all financial instruments will exhibit the expected fifth wave of a higher degree. Am I making sense? Have you ever come across this? Have you been counting wave? You see 1, 2, 3, 4, 5, second wave. So you see 1, 2, 3, 4, 5, correction, 1, 2, 3, 4, 5, correction, and you expecting it to go up, and now it didn't. And it come down, one, and then boom, down, correcting the ABCD chart pattern. Just a little trap for Elliott wave analysts, Elliott wave technicians, so they may be aware of it and avoid those traps, okay, so they can make excellent wave analysis. All right? You will promise me that from today, you'll be aware of that trap and you will be able to avoid that trap at all costs, all right, and make excellent, okay, wave analysis, okay? You have any question or suggestion, put in the comment section, and in due course, I will be busy recording another video to answer your specific question. We are the TSTWSYS008 traders talking about how to avoid the trap of Elliott wave analysis. Happy trading to you all, and speak to you soon.